So steps to identify these demand zones. So we will always start from current price. So that is the right of the chart. The last candle of the chart is the current price. Going from right to left, for a demand zone, we look below current price. Look down and identify explosive rally in price. So what are we looking for? Price explosion. Very strong rally in price. So there are only two possibilities. The formation can be a DBR or it can be an RBR. Drop based rally or a rally based rally. But not all RBR and DBR are the same. So some zones score better as compared to the other zones. So we need to do a preliminary quality check of the zone. So what is the check? We should make sure that the zone that we are identifying is fresh. So in the previous slide, we saw what is fresh zone. Leg out should be strong. So how do we quantify strength? We'll get to that. And maximum 6 candles in the base. So let's look at quality check number 2 and 3. So first we'll look at number of candles in the base. So we are having a drop, that is the leg in, and there is a leg out. So don't count the leg in and the leg out. In between the leg in and leg out, how many narrow range candles are there? That we need to count. So in this illustration, how many narrow range base candles are there between leg in, leg out? The gray shaded candles, the narrow range ones over here are 4. So for any zone to be a quality zone, you require a minimum 1, maximum 6. So what is the logic? Why not more than 6? So friends, you have two structures. One, there is only few candle basing, and let's say there is a zone where there are 20 candle basing over there. So where do you think supply and demand is going to be out of balance? We need to trade zones where supply and demand is totally out of balance. So if price is doing a long consolidation, 20 basing candles, that means institutions have probably accumulated whatever they wanted to accumulate. So next time when price retraces back, there is very less likelihood of having pending orders. So we need to trade zones where price has spent less time. So how do we quantify that? Minimum 1 basing candle, maximum 6 basing candles for time at base. Now coming to strength of the zone. So for the strength, we have to look at the leg outs, leg out and follow through. So scenario 1, there is a drop, base and rally formation. So this is scenario 1. Scenario 2, drop, base and rally. And third scenario with a different structure, drop, base and rally. So friends, out of 1, 2 and 3, which ones do you think are showing you strength? Which is stronger? Zone 1, zone 2, zone 3. So think clearly and answer. So I'll wait for you all to answer. So again, mixed responses here. There are quite a few who are saying it is zone 1. I understand why you are thinking it is zone 1, because it is of those multiple candles that are there. So you are seeing 4 candles here. So that's why you feel zone 1 is strong. Friends, what you need to look at is how did price leave the level? Zone 2, absolute 90-degree vertical move. Zone 3, strong vertical 90-degree move. This is showing you supply demand is totally out of balance. Price moved up like a rocket. Whereas over here, this is sluggish move. Look at the angle, how price is going up. So this is indicating price goes up, comes down, again picks orders, goes up, comes down, goes up, comes down. This is more like a staircase pattern. So this is not showing you strength. Ideally, the zone should be like this. good leg out, good follow through, or a very strong leg out. So these are good pictures of imbalance. So we want to trade levels where supply and demand is out of balance. So is it clear now? So we are looking at freshness, strength of zone, and time at base. So once any level qualifies on all those three fronts, what we need to do is mark the proximal and distal lines. So friends, for marking proximal distal lines, I'll mark it on the chart. So let's look at now supply levels. How to identify supply levels? Same steps, but now in the reverse order. Start with current price, but now instead of looking down, look above current price. Look above and now identify explosive drop, strong red candles. Formation can be a DBD or it can be an RBD. Same quality check. The supply level should be fresh, supply level should be strong, and maximum 6 candles in the base. Once you have that, mark your proximal and distal lines. So with this, friends, we have covered the theory portion, how to mark supply and demand zones. So any questions pertaining to whatever we have covered so far? Is it clear, friends, up till now?